Good morning, students. Welcome to the live virtual classes organized by ICAI and Board of Studies ICAI. Ashok, echo आ रहा है मुझे? Yeah. Okay. Yeah. Thank you. Students, today morning we are going to talk on this topic called foreign trade policy. We have 3 hours for this particular session. And this is one topic which is, I would say, road less travel. As a practice, as a profession, as a area, very few of us have seen this area called foreign trade policy. In fact, for that matter, customs chapter also, not many of us would be having a exposure what to do, how to deal with this particular aspects. Students, as a protocol, hope I'm audible and my screen is visible. Good morning, Sanjay. Okay. Hope things are clear. Yeah, thank you. Thanks, Swaminathan and Sanjay. Yeah. Now, I'll do a quick recap of what we have studied in our previous chapter called Warehouse and Refund under Customs Law. There are a couple of MCQs for us just to recap these provisions. Then we'll come back to the foreign trade policy, right? So in the previous class, we have discussed on this warehousing topic. We understood the basic aspects of nuances of warehouse. Why do we have a customs warehouse? The kind of warehouse we have. Then what is the time limit within which goods have to be stored in a warehouse? What are the formalities? And what is a bond needs to be executed for keeping the goods in warehouse? Also, we did a couple of problems in terms of applying Section 14, Section 15 with respect to the foreign exchange rate conversion, with respect to the rate of duty applicable for payment of duty from point of view. Also, we have discussed on in case if there is a loss, that is scrap in the process of production, how do we calculate the duty applicable to the goods which are exported for the goods which are cleared for home consumption, right? These are the things we have discussed in our previous class. I have given few examples why we use warehouse to defer my payment of customs duty. Also, I have explained you the example which deals with your manufacture. In a bonded warehouse, I can undertake a what you call manufacture activity. So we have discussed an example how a customs duty will be computed, applicability of GST and working capital which is saved, where I do this manufacture and then re-export from the warehouse. And one model where we had this MCA ROC, which is coming with mandatory applicability of digital signature for the directors. I can import in bulk, find a potential customer, and clear these goods for domestic tariff area. And we have learned this term called into bond, ex bond. When goods come into the warehouse, I file a bill of entry called into bond bill of entry. When I clear these goods from the warehouse to the domestic tariff area, I would call as a ex bond bill of entry. Then we have understood public warehouse, private warehouse, special warehouse. So there will be a bond in charge, that is the bond officer, only in case of a special warehouse. In case of a public and private warehouse, there will be a custodian, which is appointed by the concerned warehouse in charge. Private warehouse and special warehouse, manufacturing is permissible. Public warehouse, manufacturing is not permissible. Clear? Goods which are kept in the warehouse, I can either export, I can either clear for home consumption, or I can transfer to another warehouse. Then there's a concept called allowance for volatile goods. So when I have goods on which I do a manufacturing activity, or I have goods which are susceptible for evaporation, like example your camphor, petrol, diesel, or any other chemicals, when they get exposed to the moisture, there is a possibility of reduction in weight. So this is one case where proper officer may allow for reduction of weight because of this character of the goods which are stored in a warehouse. Then indemnity bond, which is a security which is given to a proper officer, which is calculated 3 times the duty payable on such goods. Why 3 times? Towards tax, towards interest, towards penalty. We have discussed on this aspect called public warehouse, private warehouse, special warehouse. Private warehouse, only goods which are belonging to the licensee can be stored. Public warehouse, in general, any person can store their goods. License cancellation. Once my tenure of this warehouse is over, the proper officer shall cancel the license. Alternatively, in case if there is any breach of the concerned customs provisions, my license can be cancelled. This is one another reason why my suspension will happen. Always in examination, when you write your answer, please keep in mind, there's an element called principles of natural justice, where a person whom there will be a permission which needs to be cancelled. There is a procedure called put the person to notice. That means a show cause notice is given. Give a substantiate point in time for the person to make his written representation. After the written representation is given, personal hearing, he will be heard out, and then the cancellation do happens. We have a legal maxim called audi alteram partem, where the concerned person should be heard out before taking a action on or penalizing such particular person. Then warehousing bond, as I have mentioned, this bond is not to protect the interest of the revenue of the customs authority towards duty, towards the principal, the penalty, interest, and any other fine which is collected by the proper officer. Interest, it's payable beyond a point in time of 90 days where the goods are kept in a bonded warehouse. And as I mentioned, in case of period for this goods to be kept in a warehouse, there are two categories. Goods meant for your manufacture or other operations. So in case of manufacturing and other operations, till the concerned importer files a X bond, the goods are permitted to be retained over there. No interest is payable. In any other case, the maximum period is 1 year from the date of order permitting the goods to be stored in a warehouse. And in case of the other category, beyond a period of 90 days, 15% is the interest applicable. Please keep in mind, students, the maximum tenure is 1 year. But because there is a loss of revenue, the government doesn't want to wait till 1 year or they say 90 days is a time within which you can store. Beyond that, the clock of interest starts ticking. As the owner of the goods which have been warehoused, I can do the inspection. I can ensure that goods are stored in a proper manner without any deterioration or damage. I can sort these goods. I can showcase these goods to any of my potential customer. Manufacturing and other operations permitted, as we have mentioned, only in case of private or special warehouse, manufacturing activity is permissible. These goods are post-manufactured, either I can export or I can clear for domestic tariff area. And in case if there is any refuse, in case of scrap, on that refuse, on that particular scrap, the duty shall be remitted if the goods are exported. If those goods are cleared for domestic tariff area, the duty has to be paid as if that refuse has been imported into India. Then for this activity to undertake manufacture, in case of a public warehouse, in case of a private, in case of a special warehouse, the concerned principal commissioner or commissioner shall be giving a permission. Removal of goods, we have discussed. In case if there is an improper removal. What do you mean by improper removal? I am supposed to remove these goods, but not remove within the time limit for which the order has been passed. Then it is deemed that the goods have been removed from your warehouse. We have solved one problem in the previous class. End of today's class, I'll upload that Excel into your dashboard. Students, this PPT, the MCQ, and that Excel file would be available for you to download after this session. Then we have discussed refund under customs law. We have discussed this element called unjust enrichment. By default, under customs law, unless you prove that this unjust enrichment has been taken care, the refund, instead of giving to the applicant, it will be transferred to consumer welfare fund. There are exceptions to this particular unjust enrichment, where if the person who has filed the application is an individual who has imported goods for personal use, then there is no concept of unjust enrichment. The consent documentary evidences are required to prove that these goods are meant for the duty or the burden has not been passed on. The duty has been actually paid. So, person who has paid, filed the bill of entry, or person who has purchased the goods can file such particular application. So, important thing, importer or exporter has to prove that the instance has not been passed on. If the goods are for personal use, no need to prove instance of unjust enrichment. Buyer who has purchased the goods for his consumption, again, he will not prove that unjust enrichment. In case if exporter, the goods are written back, where he has paid export duty, even then unjust enrichment is not applicable. In case of duty drawback, unjust enrichment shall not be applicable. Or if government has notified those people who can file a refund application, they will also get a refund. And refund under customs law, if the amount of refund is less than 100 rupees, you shall not be entitled for refund. Now, these are the aspects which we have discussed in our previous session. So quickly, what we will do, students, today, we will have MCQ questions concerned revolving on discussion what we had so far. After this MCQ, we will start with our foreign trade policy for understanding. Hope you are able to see my Word document, ma. Let's solve these questions, then we will come back to our foreign trade policy. There's one question from Sanjay. Refund claim cannot be substituted for appeal. Can you please explain that? I could not understand. Definitely, I'll explain that concept. Let us do this MCQ, then I'll handle this question of you, Sanjay. First question. Approval for warehouse shall be compulsory in nature on the basis of application filed by importer. Now, when you solve your exam MCQs, the way you attempt, the way you analyze your questions, question indicates, is it possible, is it not possible? Generally, when you put the concerned customs or GST officer on spot, that is something which law doesn't fit into. Like here, you see, approval. Who will give approval? The proper officer. Shall be compulsory. The moment they say compulsory, approval. Now, these are the terms, which try to prove that, boss, this is something which is not possible. So they're trying to question you that point of view. Compulsory in nature on the basis of application filed by importer. First answer, yes. Any application for warehouse is automatic in nature. Now, how do you get an answer? Try to eliminate those answers which are not practically possible, right? So, approval, compulsory, I don't think it is possible. So, when they say yes, probably this is not an answer. On the basis of nature of goods, proper officers shall permit. Again, this also is in line with your option A. All goods or specific goods. On the basis of nature of goods, the proper officer shall permit. Again, I don't think this is mandatory permission will be given. Then, there is no such mechanism under customs law. The term no such mechanism is very general. Now, filing an application for keeping goods in warehouse, there is a provision which exists. So when they say there is no mechanism, this becomes incorrect some way. So the left out option is proper officer may. Please look at this option, may. Now this is where you try to differentiate your way you attempt your answers, right? Yeah. So Sanjay and Swaminathan, yes, both of your answers are correct, ma? Answer would be C. So please keep in mind examination. How do you answer your MCQ questions is you try to read the question carefully. Is there any interpretation which is binding on the officer, which is impracticable? Based on that, you have to give your answer. So here, my answer would be C. C is my right answer. Let's look at second question. Bond executed by importer in relation to goods warehoused in warehouse is on account of. So they're asking, how do I calculate the bond amount? So when a bond is executed by the importer, how do I calculate that? What is the purpose of this bond? To comply with customs provisions. To comply with all customs provisions. Answer yes. Generally, any person who is importer or an exporter, this is a acceptable statement. Comply with payment of duty on goods warehoused. So whenever I execute a bond, there is an obligation. Obligation for what? I have to make the payment of customs duty as and when the duty has been fastened on me as an importer. Looks like correct answer. Comply with filing of duty drawback application. Duty drawback, bond executed for warehouse doesn't go with each other, doesn't sync with each other. May not be, or it doesn't fit into the context of the question. Comply with payment of duty, interest, penalty, fine in relation to the goods. Now, it sounds good. As an importer, when I warehouse the goods, I have an obligation to pay the duty, interest, penalty, fine as and when it is applicable. I cannot deny. So whenever I put the goods into warehouse, a duty has to be paid is a understandable point. Interest beyond a period of 90 days. I cannot promise as on today. Will I hold beyond 90 days? Will I hold it for 90 days? So here also interest may be payable. Penalty, any violations. No, we can't presume violations may not happen. May happen, may not happen. Fine may be levied, may not be levied. So here A, B, and D seems to be a right answer. C doesn't seem to be a right answer. Reason, this doesn't fit into the context which we are talking about. So ABD fits into option number 2. Sanjay, your answer is, you have given D. Please understand, ma. A, B, D would be the correct answer. Don't jump into the conclusion. Saminathan, your answer is right, ma. So here, our answer would be A, B, D. Reason, there are 3 circumstances for which I'm executing a bond. My right answer would be A, B, D. I repeat once again, don't jump into answering in a hurry. Take your time. Reason, every mark is important in your examination. The value of 1 mark, ask a student who scored 39, where your pass mark is 40. Ask a student who scored 59. Ask your student who scored 49. If I've scored 49, whereas 50 is my aggregate, 59, where my exemption is 60. When you have written one group, 199, when your pass mark is for 200. So every mark is very, very important in our examination. When we attempt our examination, my caution is don't be in a hurry. Don't get lighter. Don't get carried away. Please watch out the options given, watch out the reasoning, logic, and then make an attempt. And in whatever mistakes you have to do it in the classroom, do it in the practice sessions. Reason, this is where I can rectify my mistakes. Examination, I cannot rectify my mistakes, right? So let's be watchful. Next, question number 3. Basis for computation of value of bond to be executed for warehouse shall be. Warehouse. Basis for computation of value of bond to be executed for warehouse shall be. Option A, 5 times the duty amount involved, 4 times the duty amount involved, 3 times the duty amount involved, 2 times the duty amount involved. when we read these questions now, when we know the concept, we will give a right answer. When we don't read this concept, when we go to the examination, now you have 2, 3, 4, 5. Now, when we don't know the concept, could be 5 times, could be 2 times, could be 3 times. We have no Anaminadina. No, we try to apply the jingle and they say B looks the right answer. D looks like a right answer. Or we'll close our eyes, finger and point out. Now, this is quite costly in your examination. Never ever go to examination with this level of preparation. You have institute material. End of our institute material, there are a few questions for practice. Please look out those questions for practice. Also, we have RTPs, previous year question papers. Go through those questions and answers to get those concepts. Like I understand foreign trade policy, customs. These are the topics which we have never studied. But nevertheless, look at these question and answers end of the chapter. This will help you to understand the concept at least from our examination point of view. So what would be your right answer for this third question? Swaminathan, Sanjay, all of you have said 3 times. Yeah, it's a right answer. 3 times is a right answer. Then fourth question. Permission for into bond manufacture shall be granted. Permission for into bond shall be granted by proper officer, superintendent of customs, assistant commissioner or deputy commissioner, principal commissioner or commissioner of customs. This becomes a little tricky. Think and give answer. Permission for into bond manufacture shall be granted by proper officer, superintendent of customs, assistant commissioner of customs, principal commissioner, deputy commissioner of customs. Now, these are the questions. Looks very, very easy, deceptive in nature, but it will test your destiny when your results are announced. I was telling you, be careful. Okay. Swami says assistant commissioner or deputy commissioner. Sanjay says proper officer. Again, Swami says D is the answer. Okay. Swami, what is the reason shifting from C to D? You can unmute and give an answer if you want it. Okay. Please keep in mind the question permission for into bond. When I say into bond, generally we can say proper officer, but catch word here is manufacture.
Hello? Am I audible, sir?
Yes, ma'am.
Yes, good morning, sir. See, actually, here they are talking about that manufacturing activity, not for general storage. See,
Yes.
actually, the manufacturing activity will happen in the private warehouse and the special warehouse,
Very
not to the public warehouse.
perfect.
When
Perfect.
you are getting the permission into the manufacturing activity, it will be granted by the principal commissioner and the commissioner. I thought
Yeah.
that initially the warehouse is
Yeah.
the proper officer. Little bit confusion between the
Yeah.
A and C.
Yeah.
Then
Understood.
only I looked into the manufacturing. I missed to look at the manufacturing activity
Got
on the
it.
initial stage. That is my
Got it.
mistake.
Got it. Done, Swami. You can, yeah. This is rightly as Swaminathan mentioned, we get deceptive the moment we see into bond and whatever warehouse. So ideally, proper offices is a term we have come across most occasions, but because it's manufactured, principal commissioner or commissioner is the authority who takes a decision, not otherwise. Right? Don't worry, ma. As I said, Sanjay, this is a platform. Let's do mistakes. Let's correct our mistakes. Examination, We can't afford to do these mistakes. And CA exams are meant to be written once, not twice. That's how our preparation should be. Relinquishment of title, relinquishment to title of warehouse goods can be made. Now, there is a concept called relinquishment. So why is that relinquishment? Who wanted relinquishment? What is the logic behind this relinquishment? This is where I give away the title to the goods. Last session, I gave an example called Badmash Company, this hero called Shahid Kapoor. Where no one leg shoes are imported. Later, one more consignment of one more leg shoes are imported. That's a concept which is borrowed from the customs into that movie. So here, relinquishment of title to the warehouse goods. I brought the goods, filed into bond, went into the warehouse, parked over there. When can I do that? Answer A, anytime prior before clearance of goods for home consumption. Anytime before clearance of goods for home consumption. Very general. Examination, when you don't know the answer, try to eliminate the general answers. Answers will be specific in nature. At the time, proper officer passing an order. At the time, proper officer passing an order. Now, when a proper officer is passing an order, it's like, no, like I'm waiting for the officer, I'm standing in front of the officer. Sir, how much you levy duty? Sir, how much you levy interest? Sir, how much you levy penalty? How much you levy fine? Let me take a call. Whether to clear for home consumption, to file export, or to export. May not, may not. No such mechanism. Again, this kind of language, no, straight away, no such mechanism should be parked in a back burner. Now, left out option, anytime before the proper officer passing an order. Now, this is a appropriate answer. Anytime before a proper officer passes an order, right? So my right answer would be C. Right, Yogesh and Saminathan, both of your answers are right. So the answer for this question would be any time before the proper officer passes an order for clearance for home consumption. With this, we come to the end of our MCQs. So let me come back to our next topic called foreign trade policy. Let me open one blank Word file. Yeah. Foreign trade policy. This is one topic, as I said. This is a topic, the road less traveled. Why do I say that? This is one area where a lot of potential is there in terms of practice who wanted to have their career beyond the ordinary career. Like when you think of practice, you can get qualified. You can choose to get into industry. You can choose to get into practice. Once you get into the practice, the legacy practice, statutory audit, internal audit, tax audit, GST specialization. These are one areas. Similarly, you have information technology audit, ESA specialization. The future is tech era. Nevertheless, the roots of audit is something which would continue to exist as long as the financial world happens. So I would say the activity of audit, accounting is a basic skill set with taxation. After getting qualified as a chartered accountant, I would say we should never leave the roots of accountancy, audit, taxation, but specialization adds a cream to your area. Customs and foreign trade policy is one such area. Very few people have ventured into this particular aspect called foreign trade policy. Yeah, sorry. There's one question of Mr. Sanjay, sorry, Swaminathan. Let me take up that particular question. Yeah, Sanjay has asked this question. Refund claim cannot be a substitute for appeal. Can you please explain? Now, let me just come to a blank document. So the question is this. My refund application cannot be a substitute to appeal. Now, I'll give you the basic modus operandi of these two. Then what is the statement? How we will write our answer in our examination. One hand, you have refund application. On the other hand, you have your appeal. Why does refund application come into picture? So when I have paid duty or interest excess than what? Excess than what has to be paid. Right? So refund application, when I have filed a refund application beyond what has to be paid, then I seek for filing a refund. File a application. This is our general understanding of a refund application. On the other hand, appeal. When a person is aggrieved by a decision, by a decision or an order of a proper officer. Right? Now, look at the element 1, look at the element 2. Element 1 is suo motu in nature. Element 2, activity or event of a proper officer. Right? Both are on a different footing. So here, whenever there is a decision made by a proper officer, on the basis of such particular decision, the importer or exporter pays duty. Now let's take an example. Say Yogesh happens to be a proper officer. Swaminathan happens to be a importer. Yogesh says that Mr. Swami, you have imported certain items. These goods have come from China. These goods shall be subjected to anti-dumping duty. In addition to that, countervailing duty. Now, there is a concept. There cannot be mutual, concept of mutual, you levy anti-dumping duty, also levy countervailing duty, also levy protective duty. So, you cannot levy multiple duties on particular goods. Now, in this case, for a moment, let's assume that Yogesh passed an order, Swaminathan paid that particular duty. Having paid that duty, Swaminathan approached his consultant. His auditor, his chartered accountant said that, Mr. Swaminathan, there is a provision under customs law. You are not supposed to pay this particular duty. Only one set of duties is acceptable. Levying of multiple duties, not acceptable. That point in time. Now, what option Swaminathan has got? Mr. Swaminathan should have filed an appeal within a period of 60 days from the date of payment of duty. 60 days within order or decision which needs to be challenged, right? Now, 60 days is my time clock within which action should have been taken. For a moment, Mr. Swaminathan approached the chartered accountant. So let's assume Samay happens to be a chartered accountant. He approached Mr. Samay on 61st day. 61st day. By the time they approached and the decision is made on 95th day, Mr. Swaminathan decided, let's file a appeal by which the due date for filing an appeal is over. Then they try to explore, let's not file an appeal, rather let us file a refund application. Refund application for what? Excess duty paid. Now here, beyond the regular duty, I have paid protective duty, I have paid countervailing duty, I have paid anti-dumping duty. Now I'm trying to seek a refund application. Through refund application, seek a refund of that countervailing duty, anti-dumping duty, or protective duty, any of them. So here the customs law comes and says, look, you have a watch window. You have a window within which you are supposed to do an action. You have crossed this golden period of 60 days. You have not chosen an appeal. Rather, you have come to a window called refund where you wanted to claim that particular application, that duties and taxes. So here they say, proper officer under refund road cannot adjudicate a decision or order by another proper officer. That means to say, the job of the proper officer for refund is different. The job of proper officer under appeal is different. In your case, your right window, right mechanism is to file an appeal. Because you have exhausted the statutory time limit, you came into another window called refund. This is where the provision says that refund application cannot be a substitute to file an appeal. So this is a background for this particular statement. Let me know, students, you have understood this concept. If you have understood, we'll come back to our foreign trade policy. Very interesting topic, actually. Now we have Supreme Court judgment, which has been quoted in the institute material. And students who are listening to me, no material can substitute our institute material. Reason, the way they have put in these topics, examples, summations, the what you call examination point of view, the relevant provisions, they have done a fantastic job. The Board of Studies, ICAI, the pictures, in fact, when we were studying, we used to have only black and white, no pie charts, sorry, no flow charts, no recapitulate, no end of the syllabus we have little recapitulate. Now, these kind of mechanism we didn't have. So you're lucky to have our institute material, the Board of Studies ICAI material. I would strongly recommend, ma'am, go only with the institute material. There's nothing called substitute our material. Thanks for the confirmation, ma'am. Now let's move on to our topic called foreign trade policy. Foreign trade policy. One of a very, very interesting topic, I would say. Look at this topic as a window where your career opportunities can be explored, not from an academic point of view. Now, before coming to that, let me look at this way. We have Department of Revenue, Department of Commerce and Industry. Department of Revenue, Department of Commerce and Industry. For your information, this Department of Commerce and Industry is chaired by Mr. Piyush Goyal, who happens to be a chartered accountant, who's a ranker in intermediate, who's a ranker in final, exceptionally, extraordinarily knowledgeable cabinet minister. Department of Revenue, this is under the control of Ministry of Finance. This is under control of Ministry and Finance. Now, we call CBIC, where you have CBDT for direct taxes and CBIC for indirect taxes. Under CBIC, you have your GST and customs law. On the other hand, Department of Commerce and Industry, I have the authority called DGFT, Director General of Foreign Trade, Director General of Foreign Trade. So this is a backbone for our economy, I would say. So whenever I talk about economy, you have aspects to deal with your imports and exports. Whenever I say imports and exports, there's a concern with respect to your foreign currency. So when we talk about foreign currency, the authorities who are connected with foreign currency, you have RBI, you have FEMA, you have your customs, you have your GST authorities. Also, you have your DGFT authorities. Now, look at the watch window. Not only one agency is concerned or connected or regulating. There are multiple authorities who work in tandem. So it's like my hand. I have 5 fingers. All these authorities, all these agencies come together, have a consensus. Some of the agencies will be having a supremacy, all rest will follow the supremacy authority. So as on today, you have RBA, the big brother, who regulates money in, money out, money in circulation. But formulation of framing a policy is under FEMA. So from your examination point of view, you would have studied FEMA, you would have studied some amount of banking norms, customs GST, what we study in our indirect taxation. DGFT is way today I'm going to take you through for our understanding. So the backbone, the foreign currency, that's import and exports, the industry, the trade in general is monitored, regulated by DGFT. So here I would say policy. Now, I will put it this way. With respect to policy framing, DGFT comes into picture. With respect to administration point of view, customs authorities, customs will come into picture, right? So a policy is framed by DGFT authorities. Administration of that is done by customs authorities. I'll give you an example to make you understand for this. Again, students, I'll go in little in a general fashion to make you understand. Then I'll come to our institute material for the respective topics, what we need to understand, how do we present our answer in our examination point of view. Now, let's take example of bill of entry. Bill of entry, I don't know how many of you have gone through the bill of entry. When you look at your bill of entry, there are details. Who is an importer? What goods he has imported? What is the corresponding HSN? For that corresponding, what is the duty rate? On this goods, what is the kind of levy which happens? This is in relation to my bill of entry. Similarly, when you watch your shipping bill, you have something called your exporter, the goods which are exported, then based on the goods, what is the HSN? Then in case if any duty is payable, what is the duty which is called export duty? So here, Schedule 1 is where you will see the rate of duty. Schedule 2, you will find your export related duty. Now, goods on which a duty is payable, there could be an exemption on account of EPCG. Goods which are exempted on account of advance authorization or duty-free import authorization. Similarly, goods which have been exported, for a moment, if the goods are not subjected to Schedule 2, on the basis of the FOB value, you would be something it's called duty drawback. Duty drawback. Or you would also see RODTEP, some scripts. Don't worry about the technical terms. I'll explain. My job is to explain you as we travel through. We are trying to have a basic understanding. So here, When you see these aspects, it's like no brother and sister or brothers working together. My customs authorities, my DGFT authorities, my customs authorities, they work in tandem together. So here I was talking about administration and customs. Policy framing is done by DGFT. Administration is done by customs, right? So the elements of import, EPCG, advance authorization, duty-free import authorization, these are all policy framing which are done by DGFT authority. But with respect to implementation, the administration is done by the customs authorities. What happens? So when I go and file my bill of entry, when I file my shipping bill, whatever exemption is there will not be, the taxes and duties will not be collected by customs authorities. So when the goods come, this is under the regulation of customs authorities. So administration is done by customs authorities, right? So payment of your duty drawback, payment of the duty script, all monitored by customs authorities. In tandem, in consonance, in consultation with this authority called by DGFT authorities. So these are the fundamentals which we need to understand before we move further with respect to the DGFT provisions. Swaminathan says, importer, what goods, country of origin, country of destination, value, currency, export, port name, destination, rate of duty, GST date, GST number, other duty, all will be there in the bill of entry. Yes, ma'am. I have picked only few examples what are relevant. Whatever Swaminathan has mentioned, these are all the elements which would be finding a place in my bill of entry, right? So here, for us to start with, there is a it's like a mind and a heart. Heart will say what needs to be done. Mind will do the instruction. The instructions will be sent to hand, all the body parts through mind. So it's like DGFT is going to say, let's do this for an importer, let's do for an exporter. Customs will say, okay, I'll do the controlling of this as an administration point of view. So how does it happen? How does it happen? We have something called PAN. We have something called GSTN. This is for our CBDT. This is for our CBIC. That is your GST law and customs law. Similar to this, I have something called IEC, which is under my DGFT, right? So when a record, when a database gets created under income tax, under indirect tax law, that is your customs law, your GST law, PAN is something which is required. Continuation to PAN, GST number is required for a GST law. Similarly, under DGFT, I get identified, I get recognized using something called IEC. This is called Importer Exporter Code. Importer Exporter Code. Now, this is a 10-digit alphanumeric. My IEC is a 10-digit alphanumeric code. This is as good as your PAN. This is as good as your PAN. Whatever is your PAN, that would be IEC. Please remember, just because you have a PAN, you cannot say that, sir, I have an IEC. No. My database, my identity under DGFT gets recognized only when I register. Only when I register, I get IEC allotted. I get my IEC allotted. So keep in mind, having a PAN, it is not deemed that you have an IEC. I need to have a PAN. I need to register under the DGFT portal. I'll just take you through the DGFT portal, ma'am. Yeah. So this is my DGFT portal where all the aspects what we are going to talk about are going to find a place over here. IEC help, apply for IEC, link your IEC, update IEC. So this is the basic fundamentals what we would be doing with respect to the DGFT. So first and foremost, unless I apply, you can see here the term apply for IEC. Unless I apply for IEC on DGFT portal, it is not deemed that you have a IEC code on DGFT portal. So compulsory, you need to register. Examination, 1 mark MCQ. What is an IEC? IEC is a code given by Ministry of Commerce. IEC is a code given by DGFT, which is called Import Export Code. IEC is a code allotted by DGFT, which is having 12 digit, like GST 15 digit. So don't get carried away. It's as good as PAN. PAN is alphanumeric, which has got 10 digit validation. The same is for my IEC also, right? Now, earlier under DGFT, my IEC number was different, my PAN number was different. Like, when you look at IEC, I used to have 12-digit different code, like some number or some, there is a number which is given, which is just numbers. Of late, after this, what you call integration of data between your income tax, your GST, your ICE gate, and your DGFT. Also, to some extent, ROC. This integration made a platform where my IEC is akin to PAN. IEC is akin to PAN. Earlier, like I don't know how many of you have seen old IEC, which is only numbers. It doesn't have alphanumeric, like PAN. Later, even the DGFT have migrated themselves and saying, no more no individual numbers from our database. Let's have PAN as a IEC altogether. This is what they have decided. Let's move further. Okay, Swaminathan says from 2016, PAN and IEC were made unique from both the portals' perspective. Good. Now, so what is expected from your DGFT? What is expected from DGFT? Now, this is to facilitate imports and exports. So here, what is their role? They have to make a policy. They have to identify the needs of the industry, coordinate with other ministry like Ministry of Revenue or external agencies, and bring out a policy framework which gets aligned with global practices called World Trade Organization. So here, the role of DGFT is just not to give an IEC number, give some policies and all. No. A classic example right now, what our industry is running through, there are tariffs which are imposed by US on goods which are exported by Indian exporters. Now, these tariffs are going to be a burden to the exporters in India, burden to the importers in US. Now, what happens? What needs to be done? There needs to be a dialogue which needs to be made by the Ministry of Commerce and Industry, where being a member, I have to put forth to these agencies to say, look, there's a bilateral treaty. There's a violation of bilateral treaty. If you put a tariff, I have to levy a tariff. If we do that, this is going to be a ill health competition where they try to ease out these particular bottlenecks. These are all aspects what they do with respect to the business as such. Now, foreign trade policy, if you See, as on today, we have FTP 2023 policy, which is made as on 2023. I have something called your FTP Act and your handbook of procedures. Like in GST law or income tax, we have a Bail Act, we have the procedures. Similarly, in foreign trade policy, I have an act which has called 11 chapters. Similarly, handbook of procedures, I have 11 chapters. Let me quickly run through our, come to our institute material. Yeah. Contents of foreign trade policy. The foreign trade policy is identified into two elements. One is your foreign trade policy 2023. Foreign trade policy 2023, which has got 11 chapters, which is a basic policy, which is like your Bail Act. This has been notified by the central government on 1st April 2023. The second, the rules are prescribed in the Handbook of Procedures 2023, again, which also consists of 11 chapters, which is procedural in nature. Procedural in nature, right? So my foreign trade policy, this is a legal framework. Legal framework. Like example, what is a duty remission scheme? What is a duty exemption scheme? The basic modalities of framework are there in foreign trade policy. The procedural aspects are there in my handbook procedures. So how does it work? Like you have, for just ease of understanding, in GST law, I have section 16, which talks about input tax credit. What is a invoice? What is it? Modus operandi of receipt? Payment of tax to the government, filing of a return under GST law. All these are the basic provisions under section 16. I travel to the GST rules, rule 34, rule 35, rule 36, rule 37, which are basic procedures which are connected with your Bail Act. So something is like that, my handbook of procedures. Handbook of procedures. Let me just clear. Yeah. Moving further. Let's come back to examination point of view. What can be, whatever I have explained to you students, these are the basic things which are there in our institute material in the initial paras. Foreign Trade Development and Regulation Act, under this particular foreign trade policy has been evaluated. Salient features. Now, let's start from here. Ayush is asking this question. So why is this handbook of procedures not rules? Like how we have legislation of foreign policy different from other laws. I would put it like this, Ayush. Let's take our own example. Paternal side, maternal side. The way procedures are there for paternal may not be there for maternal, right? The tax regulations are very stringent, like for that matter. A chartered accountant, when you give a particular return to be filed, the way we read in between the lines, N or comma, semicolon, full stop. We try to read the provisions in between the lines. This is where interpretation comes into picture. Taxation needs to be very, very minute in nature. Regulations, policy, they don't need that fashion, that modus operandi. So when we have enacted these laws, no, again, the root is our British regulations. So we used to call regulations, like when you look at UK, US, no, for that matter, UAE, they call regulations. They don't call act and rules. So the way the language came from over there, how regulations are there with respect to commerce and industry, with respect to our taxation aspects. So this is, came as a hierarchy from that era. Salient features to start with. The following are some of the key attributes of foreign trade policy. Foreign trade policy, where it says, my import and export yeah. Import and export of goods and services are generally free. Generally free. Unless specifically regulated by the provisions of the policy or any other law. Policy or any other law for time being in force. So they say that you have imports, you have exports. These are generally free. Students, whatever I'm explaining you, please keep in back of mind. When you write your answer in your examination, try to use these sentences where you fill in your answers. End of this discussion, I'll take you through one question, like example. Explain the procedures, explain the provisions connected with duty-free import authorization, advance authorization. Then in that answer, in general, you'll say, the goods meant for import are generally free in nature unless regulated. So I use these terms by framing my answer over there. So what I would suggest at this point in time, the words which I'm underlining, the words which I'm putting in the boxes, please write down in your running notes. These are the words which we use in our examination when we write our answers, right, ma? Like revision, when you do the revision, the moment you see the terms, it should not tick to your mind. This question, this is how I have to build my answer. So here they say that goods are generally free in nature unless regulated by the policy myself or by any other law in general. Now, let me come to my Word document. Now, DGFT has a ITC HS, Indian Tariff Code, Indian Trade Classification based on Harmonization Code. So they call this as Indian Trade Classification. So there are certain items which are of high priority, which needs to be regulated. So you have Schedule 1, Schedule 2, and SCO-MET list. Under this foreign trade policy, we actually come across this particular term called SCO-MET list, which talks about special chemicals, organism, material, equipment, and technologies. See, you would have been seeing movies, this what you call this web series and all, right? Whatever you see, this detective movies and all, they're nothing but the regulations which are a small concept is taken, narration happens as a movie. Now, the SCOMET list, what I've written here, special chemical, organism, material, equipment, technologies. Now, these are all regulations which are done by the ministry at a policy level, I'll give an example. Let's imagine that there is a program, there is a software. This software is hazardous. Now, how is it hazardous? Like, for a moment, you would have seen the scams which happen. Like, you get a message saying that your parcel has been rejected. Click this to check the status. The moment you click on that particular hyperlink, your mobile gets hacked. Recently in Karnataka, there's one movie star called Upendra. This incident happened, no, hacking of a mobile phone. There was a, like, this superstar Upendra, his wife got a message from unknown number saying that so and so parcel has been rejected. Kindly click this button to check the status. So this lady clicked on that particular hyperlink where it went to some navigation. Doing so, like OTP validation, but say unconscious way, we get into a trap. So the mobile got hacked without her knowledge, because like, like as a family, she has got her husband, she has got her, like her children. So she sent this message to her husband that, hey, look, something has been happened, can you check the status? Because it came from a wife with, like, at times we also go unattended, in an absent mind. So he also tried to check what happened. So both Upendra's phone and his wife's phone got this compromise. Immediately, the hackers, what they have done, they have sent a message saying that, hey, look, I have been stuck at so and so. I need this funds urgently, 50,000, 10,000, 40,000. Some lakhs of rupees have been no taken by doing this particular hacking. So here, importing that particular technology through a program, through a communication, through a particular, what you can say, modus operandi. So these are certain things where you have a treaty at a world level, like World Trade Organization. Many, instances where they try to formulate a regulation. No, I don't want to allow import of this particular technology from this particular nation. Like when you talk about technology, design, drawing, you have this Iraq and Iran. Most of your engineering, we have this CAD CAM software, CAD CAM. This is three-dimensional engineering software. Most of this engineering software is from those nations called Iraq and Iran. And like when we talk about this technology, what else come along with the technology, God only can imagine, right? So here you have certain list where the chemicals, organism, material, equipment, technology are all regulated block under this particular ITCHS. We call Indianized Indian Trade Classification, put into Schedule 1 imports, Schedule 2 exports, and a third category called SCOMET list, completely organized, controlled industry. Another example, the human trafficking, or I would say, like, this the donors. You can imagine, like, all these movies. Why again I'm spending so much time? See, when I tell you the background of the law, the way it gets implemented, you get a zeal, you get an interest to read these particular topics. When you read as a simple theory, you would lose a sight of these topics and chapters. For a moment, the blood samples which needs to be sent for some analysis. Now, human organism, like, we have this amicable cord. Now, these days, we have this blood bank, the cord bank. Any road accident happens, the amicable cord is where they use to reproduce cells using that particular cord. So whenever a baby takes birth, they cut this amicable cord, which they put into a what you call repository. So they have a separate wing where you store these organisms. Till your life is there, that umbilical cord is something which uses to regenerate a part of your organism. Now, this is where science comes into play. Even the policy, regulators have a major role to play. This is where my DGFT says that I regulate. How do I regulate? In general, all imports and exports are free unless regulated. So regulated will be either restricted or prohibited or prohibited. So I, as an authority, I say these no classification restricted. Restricted means probably quality, probably quantity. Like example, we have studied this concept called anti-dumping duty, countervailing duty, right? When you really look at these officers who work in customs, there are very good intelligent officers because of which the nation's pride is intact as on today. No, again, no, the movies, what we see, what we get inspired. Having this academical track record, you write your civil services, get into this IRS, get into the customs law, unimaginable world altogether. Reason, like the spy movies, what we're talking, something like is that where our valuation comes into play when we get into these no industries or these organizations. The element of countervailing duty, the element of anti-dumping duty. Now, what I have to do, I have to analyze. Like I'll give a simple example how it works. Let me take example of steel ingots. The steel which gets imported into India. Now, I need to have statistics. This stats with respect to domestic manufacture, then import country specific, then demand of industry. This is one side. On the other side, whenever I talk about import from a country, analysis of origin country. That is their demand and supply. Is there a domestic demand where they are able to cater? Are they not honoring the local demand? Rather, the supply is happening outside the nation. Thereby, my element of this countervailing duty comes into picture or anti-dumping duty comes into picture to safeguard the interest of the economy as together, right? So this is where my regulation called restriction on the basis of quality, restriction on the basis of quantity is being done. Sir, how do I do? Now, I have branches of my DGFT. I have my branches of DGFT. So DGFT, how do they work? They work with the regional authorities. Or we have state trade enterprises. Like I have FCA, Food Corporation of India, ONGC. Now, these are a couple of examples of state trade enterprises. So I have a regional authority, I have a state trade enterprise, then promotion, like no, I have I call EPC, Export Promotion Council. These are the various organizations like your FEIO. These are the authorities who regulate, no, like I was talking, no, analysis of within country, analysis outside country. Now, these are all done by DGFT with their nodal agencies to get the information. How do I control? How do I regulate? So in the process, I have also used a term called prohibited. Prohibited is where no means no. No means no. Certain goods identified at Schedule 1, certain goods identified at Schedule 2 or SCOMET list. Prohibited means You are never not permitted to either export or import those goods into India. Now, this is where my DGFT comes into play, where they are saying that my goods and services are generally free unless regulated. Now, this I do myself as a policy or any other law for time being, like Ministry of Health, Narcotics Department. I get information from Ministry of Health saying that, look, so and so drugs can be imported into India in a diluted form. These drugs are hazardous in nature. So please regulate these particular drugs, even if it comes in a diluted fashion. So this, like, no, in general, it's free, it's restricted, it's prohibited. Some goods are free for import, export, but can be imported and exported through state trade organization. State trade organization. Like I was giving example, FCI, ONGC. Now, if you look at this particular institute material, page number 18. You can see a state trade enterprises. In state trade enterprises, they have given my state ITCHS specifies against certain goods that they can be imported or exported only through state trade enterprises. So they say that under DGFT, I have Indianized the Indian trade classification, where they have mentioned that goods either import or export, I permit only through state enterprise. State-aid enterprises are government or non-government enterprise, including marketing boards which deal with goods for export or import. DGFT has a discretion. DGFT has a discretion to issue authorization to these entities to import and export the goods which are notified for through STE. Some of STE are FCI, Oil and Natural Gas Corporation, ONGC, National Fertilizers Limited, IREL, Indian Rare Earth Limited, National Dairy Development Board, National Agriculture Cooperative Market. Like similarly, you have Rubber Coir Board, etc. In Kerala, we have. So these are certain examples where my state trade enterprises are under the supervision of foreign trade policy. So here, what they say, whenever you want to import, whenever you want to export, you do at your own. Point number one. Second, don't do. Rather, you supply to the state trade enterprise. In turn, the state trade enterprise is going to export. Or you want to import, write a letter to the state trade enterprise. They will import and they will sell, they will supply the goods to you in a direct fashion. Now, this is where the control is being exercised by the DGFT on the basis of my what do you call need of the industry, right, ma'am? Then there are restrictions on exports through various strategic uh, like no restrictions with respect to health, defense, environment. Now, at a policy level, I can say these goods are not permissible, like defense. For an instance, drones. For a moment, assuming there are drones which have a capacity to diffuse a bomb. There are drones which have a capacity to make an explosion. So I say drones which can diffuse, drones which can have an explosion. Now those drones are regulated or permissible only by defense, not otherwise. Right? So this is again a policy formation. Then exports promoted through various promotional schemes. Make in India concept. When I say make in India concept, I have a free trade regulation with less rigorous inspection for the goods which have Make in India label. Various promotional scheme. Then, goods and services to be exported but not taxed. Hence, indirect tax on exports are either exempted or refunded. There's a norm that export your goods, but not your taxes. So that way, the DGFT says that we are going to come with something called duty remission or duty drawback mechanism. How do they bring in terms of duty exemption, duty refund, that is drawback, as the case may be. Now, these are the aspects in general we are going to study in our institute material. Students, I'm giving you the preamble. If you are clear with the preamble, rest all is easy for us to understand. So these are the aspects. Similarly, for capital goods, EPCG scheme, they have promulgated. They have a set of units like EOU, SEZ, EHTP, which we have a separate topic to study. Now, administration, I have clarified IEC procedures, how it is dealt. CBIC, RBI, various authorities who work together as a conglomerate to implement this particular foreign trade policy. My contents of foreign trade policy, the BEAR Act, which is your foreign trade policy, which has got 11 chapters, handbook of procedures, which are like rules, which go in tandem with my policy. Then I explained ITCHS, which consists of your Schedule 1, Schedule 2, and the third list called SCOMET list. Now, these are the preamble, the contents as a overview, what I can see in my foreign trade policy. Now, this table is where we are going to study in our institute material as a bird's eye view. Honestly, thanks to our board of studies to bring this particular topic. If don't look from examination point of view. For a moment, if this topic is not there in our syllabus, something important is gone out of our radar as a chartered accountant. Now, when I do an audit of a SSC, when the goods are exported out of India, there is a shipping bill which is filed. On the shipping bill, there are certain incentives called duty drawback, RODTEP, which is called duty scrip. Now, when I get a duty scrip as a chartered accountant, how do I account for duty scrip? How do I do a disclosure in GST? Is it an exempted supply? Is it a taxable event? Is that a taxable item where income tax needs to be paid? No, or is it a balance sheet item? Now, these are all aspects which are connected to me as a chartered accountant for me to understand. So I'm giving you both side view what we were expected to learn from this particular chapter. So next, another 1 hour, we are going to understand. When I've explained this particular legal framework, so this is completed. What we need to understand with respect to DGFT, the IEC, interlinking between indirect tax, direct tax, the list 1, list 2 kind of thing, and the SCOMET list. Then general provisions, expect a, you can make a note, expect a theory question for 4 marks from this particular general provisions with respect to imports, exports. So what do I expect from this? Mr. X wanted to import goods into India or as a sample for his business purpose. Examine the DGFT provisions. Similarly, XYZ Limited, an exporter, would like to export goods out of India for a value of rupees 2,50,000. Examine the relevant GST provisions. So you can expect theory questions from this particular chapter number 2. Then developing districts and hubs, this is very general. Where I explained with respect to STE, regulation for imports, regulation out of exports, generally dealt with these export hubs, and also in general, they try to develop like how it will work. India as a whole, we have states, we have various no, union territories. Every state, we have districts. So every district, you need to have a hub which monitors, which acts as a watch window to pool the data to be given to the state. From the states, it goes to the nation, where decisions are made at Delhi. Right now, DGFT, they have their main office in Delhi. All the information percolates from the districts to the center. So their agenda is to identify, like example, fisheries, agriculture, cotton. They wanted to identify at the grassroots level. When I have a district hub, the objective of district hub is to understand what is the scope of resources I have, what is the volume of production which happens, where that production should be exported. Like example, I have fisheries which is dealt in Kerala, which is dealt in Andhra. South India, Kerala and Andhra are major belt where majority of this fish and prawn gets exported to US. And this is one industry which is struggling to the core because of the tariffs which are implemented by US. What does this district hub will do? They try to identify what is the scale of operations being done by the fishermen, what is the nearest seaport, what is the road connectivity they have, if they want to export to Middle East, if they want to export to US, what is the best seaport which needs to be done? What facilities they need as an infrastructure? What is the logistics what they need to have? Now, these are the decisions which get to the ministry level through the district hubs. Examination, this is where we need to understand with respect to district hubs. Swaminathan says, for CA and SUN, everything is applicable, no exception. I completely agree with you. For student, only student module is applicable along with MTP, RTP, pass exam. One of my senior told. I completely agree with you, Swaminathan. As a student, my Bhagavad Gita, my Quran, my Bible is my institute material. Whatever is there in our institute material, as a student, I have to study. Once I get into the industry as a chartered accountant, as you said, sky is the limit. There is nothing called ceiling for us. I completely agree with you. Coming back, duty exemption remission schemes. This is one important area where you get a theory for 4 marks. Examine the duty remission schemes available. Duty remission schemes available, or compare the available model, advance authorization, duty-free import authorization. So they may ask you a comparative, examine and compare AA versus DFIA. This is one theory question which you can expect from your examination point of view. APCG, religiously, mutual, consecutive nature. Previous attempt they have asked, this attempt they may not ask. Again, a theory question, explain the modus operandi of how APCG scheme will work. XYZ company have imported the goods, examine whether they can purchase machinery and APCG for upgradation, for renovation. A theory question for 4 marks you can expect from APCG. EOU HTP, now this is very, very dry in nature. This is, I would say, a topic which is procedural. They, in your institute material, they have touched upon who can operate and what benefits I have, which is called as deemed exports. You can expect one question, explain the concept of deemed exports operated as EOU. Mr. XYZ, ABC Limited have exported goods to a company who is operating as EOU, who is having a license or authorization called advance authorization. Can that be considered as a deemed export? Now, these are the way the questions are tested in your examination. So I'll try to touch upon this. I'll try to touch upon this. I'll to touch upon this. This also I'll touch another next 1 hour. Deemed exports. This is in general. I'll just quickly run through you. Quality complaints. This is one important topic connected with recent amendment. I'll touch on this quality complaints. Expect now CA examination. There's a norm. Expect the unexpected. Expect the unexpected. This also one important question. Be prepared for your examination point of view. Promoting cross-border, I explained in the initial paragraph. So examination point of view, this is general from your what you call understanding point of view. So these are the topics which we are going to have a broader coverage in today's discussion. What we have now, students, we are at 8:30. Let's have a quick short break of 10 minutes. We'll resume back at around 8:40 to 8:45. Let's have a break for 10 to 15 minutes. Try to be back by 8:40. I should break for 10 minutes. Students, welcome back. Let's continue with our further discussion on the topics what I marked for today's discussion. This, in general, what is the expectation out of foreign trade policy for ease of doing business? So, as a policy formation, they want to have reduction in transaction cost and time. So how do I reduce the transaction cost? Transaction cost where logistics is involved. Now, which is a nearby airport, which is a nearby seaport, which is no logistics channel partner who is good enough to make a supply. Which are the nearby countries where I can explore for making this particular no exports. Transaction cost with respect to negotiating documents. When I say negotiating documents, like I have LC, BG, and other bank financial intermediary cost. Negotiating for those financial intermediary cost. One of the major move, I would say, which happened under the DGFT is a paperless regulatory environment. Hats off to this change which was brought under GST, that is indirect taxation, and also under foreign trade policy, customs and foreign trade policy. The amount of paperwork, the amount of runaround, the kind of approvals, authorities, lot of things are eased because of your automation. You have one portal called DGFT, that is your www.dgft.gov.in. They have made everything. Sitting at your desk, you file for an application authorization, which is called a license. I get license at my email. I do export, submit the documents online. I get a redemption of my license. Export duty obligation certificate. Sitting at my office, I upload the documents, concerned officer verifies the documents and discharge something called end of export of duty obligation, end of export obligation. Now, these are certain remarkable changes they brought with respect to these changes in online mechanism. Free passage will be provided to export consignment. There will not be any seizure of export goods. Now, this I will explain through a AEO concept, and there is one more concept called status holder. First aspect is AEO. Now, this is a authorization for economic operator, AEO program of Indian Customs, where a business entity engaged in international trade is granted AEO status. So there is a business entity who engages themselves in international trade. They get something called AEO status. If it is approved by customs and compliant with the supply chain security standards, such entities are considered as trusted trade partner of Indian Customs, trusted trade of Indian Customs. So these AEO holders get extensive benefits, including preferential customs treatment, preferential customs treatment. So when I say preferential customs treatment, with respect to document examination, with respect to approval, with respect to duty clearance, deferment, or self-regulatory norms, etc. In terms of reduced examination, faster clearance of processing cargo, deferred payment of duty, direct port delivery entry. Now, this is another wonderful initiative. Direct port delivery or entry. My goods from factory can get directly delivered at the port. From the port, it can come directly to my factory. Less of hassle-free regulations, examination, documentation. Enhanced border check privileges in mutual recognition agreement. Now, this is one another MRA is one another beautiful part where, assuming I have a treaty with UAE, goods going out of India having an AEO status, the way I get treated in India, the same treatment will be given in UAE also. So AEO program is based on World Customs Organization's Safe Framework of Standards, FOS. No need to bat these jargons, but understand this is what is about AEO. Then moving forward, status holder. Examination, you have maybe 1 mark MCQ on the basis of this status holder, where let's understand and then I'll explain from exam point of view. Status holders are exporter firms. Now, these are exporter firms recognized as a business leader. They identify someone as a business leader who have excelled in international trade and have successfully contributed to country's foreign trade. Contribution to country's foreign trade. So examination, in case a theory question, business having an export exposure in international trade, who are considered as business leader and who have contributed extraordinarily to the Indian foreign trade. Now, they are expected not only to contribute towards Indian export, but also provide guidance. Provide guidance. Like they would say, look, in so-and-so nation, when the good consignment comes, this is a turnaround time. This is a prior intimation declaration. There's a ease of business. So when they make a recommendation, those recommendations are examined in India. Connected with this particular point, there is one amendment in the recent customs provisions. You have latest amendments for your examination point of view. So when they say guidance, there is a window. Let me come to my Word document. Suggestions, recommendations from the trade to the DGFT shall be examined and if relevant of suggestions, there'll be a change amendment to the policy. Few suggestions not relevant shall be explained why not considered. DGFT may abstain from justifying suggestions not accepted. So here, this is one amendment which has been brought in your institute material for the coming May 2026 attempt. Any suggestions or recommendations made by the trade in general to the DGFT authorities, they would be examined. If these suggestions are acceptable, if they feel that it is relevant, they make an amendment to the policy. And few suggestions, if they feel it is not viable, they mention the reasons why though they are not viable, and they try to keep they try to low down on those suggestions. So they will say, look, you have suggested, I accepted. You have suggested, I have not accepted. Option is there. But also, there are a few things where they don't comment, they don't mention the reason why those suggestions are not acceptable. So they have a right to keep a silence on that. Reasons, considering the national interest or government policy framework or any other factors. So examination, you can expect 3 marks theory question from this particular aspect. Whenever the suggestions and recommendations are made from the trade, is it binding on the DGFT to adapt those suggestions and recommendations? Answer, they take into consideration suggestions relevant, they adapt, Suggestions not relevant, they try to justify. These are the grounds, not just practical for implementation. They also may keep silence without justifying why they have not accepted. Where they'll say the backbone for these silences, national interest or government policy framework. Coming back, status holder. So as a status holder, who have been excelled and who have been contributed, they may give a guidance and handholding to the new entrepreneurs. All exporters of goods, services, and technology. Now here, all exporters of goods, services, technology having an IEC number shall be eligible for a status holder. Status recognition depends on export performance. Export performance. Application shall be categorized as 1, 2, 3, 4, 5. The categories are like this. Categories are for 1-star state, 1-star export host. My performance should be 3 USD million in the previous year. So here, for categorization, they say applicant shall be categorized as status holder, achieving the threshold expert performance in the current year and preceding 3 financial years. So my track for current year, my track for previous year 1, previous year 2, previous year 3 shall be counted in totality. So in consideration, my 4 years track record is what is being observed. Examination, 1 mark MCQ question from this status holder determination. They say my export performance should be in the current year and compulsory, preceding 3 financial years as indicated below. So if your performance is there, like examination question, you have so and so million USD million for current year in last 2 years, in previous 2 years. So answer would be not for 2 years. I should have current. This is wrong. My performance should be there for current year and preceding 3 years I should have. I should maintain the track record. Then I would be awarded this star status category. So here the exports they are mentioning is 3 USD million if it is a 1-star. 3 into 5, 2-star is 15. 3-star, 15 into 3, 45, round it off, say 50. 4-star, 50 into 4, 200. 200 into 4, 800. So now you need to have some mechanism to remember this. Starting point is 3. So they to crack this answer, my current year plus previous 3 years. So here itself your starting point is 3 USD million. 3 into 5 is 15. That is for next category. 15 into 3, 45. Rounded off. 15 into 3, rounded off 45. Say to 50. Now having met 3 years, now 4 years is what I am looking. 15 to 4, 200. 200 into 4, 800. This is how you need to remember these values from your examination point of view. Now, see, I'm just giving a example how you can remember these aspects. Okay. Samay, I'm splitting the question. Instead of 2 marks, see, we can have 4 marks, we can have 2 marks, we can have 1 mark, where combination of 2-3 elements together pegged into this. Yeah, I got your point. Then, based on the status holder, the export performance shall be counted on the basis of FOB of exports. Please remember, students, always exports. The yardstick is FOB value. Or deemed export, my yardstick is FOR. For deemed exports, FOR. For normal exports, FOB. Again, examination, computation of your threshold, they'll give you FOB, they'll give you FOR. For exports, keep in mind FOB value. For deemed exports, because it is within India, free on road. FOR stands for free on road. Because the goods does not travel out of India, we call FOR. Sami is asking this question, what is FOR? Free on road value. Because the goods are delivered within India on road, we call FOR. The goods leave out of India, vessel, ship, we call free on board. So this is how I calculate my FOB, FOR. Granting status export performance would be necessary. Export performance is not transferable. Exports made on re-export basis. I export, goods come back into India, repair, again re-export. Those re-exports will not be considered for my star status classification. Export of items under authorization, including SCOMET items, would be included for calculation. Even SCOMET list, if I deal with, that also they say we can take into consideration. For calculating export performance, grant of 1-star status, exports by IEC holder under exports by IEC holder under MSC, micro and small enterprise, shall be, okay, this I'll skip, this is of not that importance. Where it is important, I'm touching on those aspects. Yeah. Moving further, look at this clause number F. 2-star export houses and above permitted to establish export warehouse. So when we have studied the concept of private warehouse, public warehouse, likewise, when I want to have an export warehouse, only a person who is having a 2-star and above are permitted to have export warehouse. Again, 1 mark MCQ question. Manufacturers who are also status holders 3, 4, 5 will be enabled to self-certify their manufactured goods as their industrial enterprises memorandum, industrial licensing, letter of intent, or originating from India with a view to qualify for preferential treatment under specified agreement. Now, this self-licensing, self-certification, self-certification is like make in India. This I have goods which are manufactured. I put a label called make in India. So generally, you have STE who are, or you have EPC, who are authorized, the regional authority or export promotion council who can give this certification. But in case of a status holder, I do myself. This is another important catch point. Export hubs, I have explained. SCOMET, I have explained. Imports and exports, this one table, this also I have explained. IEC I have explained. Provisions with respect to import and export of goods, expect for 4 marks theory question from this particular chapter. Where actual user condition, now these are basic definitions which we need to understand. Goods which are importable freely without any restriction may be imported by any person. However, if such imports require an authorization, actual user alone may import such goods unless said condition is specifically dispensed with. Like example, say for a moment, let's assume that there is a manufacturing activity carried on by Ayush. So Ayush has a factory at Pune. Ayush undertakes manufacture where the goods are supplied to defense. Part of this manufacturing activity requires imports which needs to be imported from, say, Russia, and which are of national interest. then I would say those imports are not free. Why not free? Because of national interest, I need to have a prior authorization. So wherever goods are not free, I need to have authorization. See, authorization is as good as a license. Earlier, I used to have a permission, which is called license. Now, the technical term is called authorization. So this authorization is required, which are actual user condition. That means usage restriction. Ayush alone is permitted to use those goods. So after usage, what I have to do? Destruction. Ayush has to destroy in the presence of the concerned officer of the customs. Now, this is where the declaration has to be provided for actual user condition. Next, samples, examination, again MCQ. Import of samples of even restricted items is allowed without authorization. Now, please keep in mind, my goods are general, restricted, prohibited. So they're saying that samples in general are allowed, even restricted items are allowed. They didn't talk about prohibited items. Samples, import of samples of even restricted items is allowed without authorization. Exceptions are defense, security items, seed-based new drugs. These need authorization. Duty-free import of samples up to rupees 3 lakh for all exporters shall be allowed subject to terms and conditions of customs notification. Examination, 1 mark MCQ. Mr. X wanted to import items which are restricted in nature and whose value is rupees 5 lakh. Whose value is rupees 5 lakh. Examine. Now we will say under DGFT provisions, goods are generally allowed for import along with restricted items. However, goods which are of restricted item other than defense or security items, value up to rupees 3 lakh are permissible. That would be your answer. So please expect a theory question where I have a combination of 2-3 small topics. Like, I have these samples, I have a status holder calculation. So I merge these 2, 3, 4 aspects together for testing point of view. Aish question. So can we say the restriction is on resale in case of actual user? See, I have to use, like here, Ayush, okay, I'll put it this way. When he says actual user condition, government gives a condition that only for this purpose you have to use. That means to say, Ayush got permission to manufacture the goods which is applied to defense. That means Ayush will never supply the goods out of defense. If you supply the goods out of defense, your permission, your license is withdrawn. Please keep in mind. So when your permission, your activity is undertaken for defense, which is actual user, you cannot send those goods for job work also. Please keep in mind. Goods have been imported by Ayush. Ayush cannot even send to job worker. Ayush cannot keep excess stock and give it to domestic tariff area. No. Actual user means actual user. I have to use in my manufacture. Post manufacture, I know who is the intended party. It should go to defense, it will go to defense. Otherwise, no. Second example, instead of defense, let's say pharmacy. When there are drugs which are imported, life-saving drugs, which have to be used only for this particular medicines manufacturer, they're not permitted to be sent for job work. They're not permitted to be sent to another pharmaceutical company. They're not permitted to be kept in stock. So I manufacture life-saving drugs. There'll be a drug control inspector. Those drugs will be under the custody or supervision of drug inspector. So whenever someone wants to draw that particular medicine, they need to file a Form H declaration. Then the inspector give a permission. So actual user condition at my input stage, at my output stage is a spectrum which is monitored in general. Hope I'm clear, Aish. Then gifts, in general, gifts are allowed, like import of gifts are subjected to duty. Exceptions are Rakhi and life-saving medicines. Passenger baggage, we have discussed in other chapter. I'll skip on the baggage part. Page number 22, examination, one more question you can have. Second-hand goods, import policy for second-hand goods as follows. I don't know how many of you have focused this aspect when you deal with your statutory audit. Whenever you do your statutory audit as an auditor, you look for fixed assets capitalization. Whenever fixed assets capitalization, you have put to use policy, depreciation calculation law. One step prior to that, whenever goods are imported into India, couple of senior chartered accountants will insist, along with this machinery, I'll explain this way. Whenever goods are imported into India, whenever plant and machinery or spares are imported, the good old chartered accountant used to verify the bill of entry. In the bill of entry, is there an entry called refurbished or used? In the bill of entry, they use brand new or used items, or at times they may also say second hand. Reason, when you have these items, this may result in dumping. This may result in overvaluation. This may have an effect on impairment. In the sense, my parent company have used goods which are not relevant for their production. They have sent back to India. Sir, when it is not in use in that nation, why should those goods come to India? The goods which have been used for 8 years have been shipped to the country at an original market value as on today's date. When I have used items, market value is of no relevance. The written down value, the life left over is relevance, impairment, which we do test in AS 28. So in this particular arena, the chartered accountant generally calls for chartered engineer certificate. Chartered engineer certificate to examine the life of the asset. The life of the asset, the run over life, and the residual life, and the fitment element. So these are good old chartered accountants. I've seen during my internship when a machinery was imported, my principal asked us to verify these aspects. Look at the bill of entry. It speaks whether it's a brand new machinery or is it a refurbished machinery. If it's a refurbished machinery, have you tested these elements before capitalization, before put to use? So when I read this, the purpose of reading customs laws, it gives me an information which will help for our audit also. Coming back under DGFT, they have mentioned that, hey, look, if you're importing second-hand goods, import policy for second-hand goods is as follows. In case of second-hand goods, which are capital goods, I have restricted capital goods, I have free capital goods. When I say restricted, unless there is an authorization, no, the goods are not permitted to come into India. So what are those restricted items? Air conditioner, DG set, computers, refurbished, reconditioned spare parts of refurbished parts of personal computer, laptop. Now, electronic, you see that silicon dumping. My country gets dumped because of silicon products. So they say, no, because your country has carbon credits, you have a necessity, you're dumping those goods into India, we don't allow. We don't allow you to exploit our soil. So all this AC, DG set, desktop computers, spare parts which are refurbished for computers, no. All notified electronic and IT goods, national interest, electronic and IT goods, they say no. IT assets, that is laptop, desktop, printer, etc., imported from SEZ to DTA. Goods coming to SEZ is okay. So goods coming from SEZ to DTA, they say not okay. Then other category is called free for import, where refurbished or reconditioned spare parts, space of capital goods, for which a chartered engineer certifies existence of 80% residual life. They say that those capital goods which are refurbished, which are reconditioned, or reconditioned space of capital goods for which chartered engineer certifies that residual life of 80% is there. If the life is less than 80%, they say no, it is restricted, not permissible. All other second-hand capital goods other than those listed above can be freely brought into India. Similarly, other than capital goods imported for purpose of repair, refurbishing, reconditioning, I can bring freely. Remaining goods restricted for import. So goods which come into India, I repair, I refurbish, recondition, and then send back. Okay. If not, they say no. Get a prior authorization, then only get those goods into India. Now, there's another interesting topic called Quality Control Order, QCO, Quality Control Order. These goods, import of items under advance authorization, EOU, SZ, enabled without complaints to Quality Control Order. Examination. This is a new topic. Wait and watch for 4 marks theory question. Reason, this has come for the first time for examination point of view. Quality control orders are regulatory mandates. Regulatory mandates. These regulatory mandates are issued by Indian government to ensure that products meet specific quality. Products meet specific quality standards. These orders typically issued by BIS, Bureau of Indian Standards, apply to a wide range of products to protect consumer safety. Now, examination, consumer safety, health, environment. In general, you can elaborate. Domestic manufacturer as well as importer need to ensure that products covered, who are they saying? Domestic manufacturer. Domestic manufacturer as well as importer. These two people have a responsibility to comply with quality control order. As well as importer needs to ensure that products covered by QCO must not be manufactured imported without compliance with specific standards. Now, what they're talking is with respect to your EOU, Advance Authorization, SZ, enabling provisions means these entities don't comply with these provisions. However, they are allowed to import. How and how it will work, I'll explain you. Let us come to the Word document. You have quality control order. Now, this is the standard by the government, QCO. I have a SEZ. I have a EOU. I have a EOU. The purpose of SEZ and EOU is they import and they manufacture and they export. Exception, clearance to domestic tariff area on payment of duty. On payment of duty. In addition to this, they also have one category called advance authorization. Advance authorization is a license to import my raw material or inputs, use in manufacture, export back for meeting your export obligation. This is what examination is asking. Is there any non-compliance if SEZ, EOU, AEA import goods in violation of QCO? So the provision says that, look, we are not bothered with all of you. Reason, you are going to import, you are going to manufacture, you are going to export. Then I allow you to import those items which does not meet quality control order provided you manufacture and export back. So what if I manufacture and clear to DTA? Then they say, no, I am not allowing you. So SEZ unit, EOU or advanced authorization holder who have imported goods which not satisfied to the norms of quality control order, you are not permitted to use those goods to bring into domestic tariff area. As long as they are not brought to domestic tariff area, you can import the goods which does not comply with quality control order and then export back. This is one provision which is spelled over in quality control order. This is what the entire theory which is over here. So they have SEZ, EOU, and advanced authorization. All the three, they have specified these aspects. Then exports. Similar to imports, what are the provisions connected with export? MCQ questions, if any, from exports. Here, I'll explain this terminology. ESMI. Goods to be brought into India, export, send it back. Never ever those goods should be used in India. That's the thumb rule. Now, coming back. Provisions relating to export of goods. They have used a term called benefits of supporting manufacturer, third party exports. I'll explain this for a brevity. I could be a manufacturer, exporter, or I could be a supporting manufacturer. I could be a merchant exporter. What else they have mentioned? Third-party exports, samples, gifts. Okay. Law has given me this kind of classification. Let's take an example. Say, Ayush has got capability to manufacture. I have a team who have been well versed with customs, DGFT, foreign trade policy, import, export, everything. So Ayush, he is self-reliant, self-sustainable. So he'll say, look, I manufacture, I do myself everything. So he's called manufacturer exporter. On the other hand, let's take an example, hypothetical example. Swami says that Ayush, I have a facility, but I don't have a team, manpower to engage to deal with this import-export compliances. Can you become my merchant exporter? Can you become third-party exporter? And Ayush says, hey, don't worry. I have goods which are going to UAE. I'll take along my goods also in my consignment. So here, I shall be called as a third-party exporter. Swami will be called as a supporting manufacturer. So whatever Swami is manufacturing, it goes to Ayush along with his consignment goes out of India. So when shipping bill is filed, in the shipping bill, the supporting manufacturer, Swami's name will be there, and also merchant exporter or third-party exporter, Ayush name will be there. On the other hand, I have someone called Yogesh. Yogesh, I call as a merchant exporter. What Yogesh will do? Yogesh will scout for local items available, the need which is there in overseas. He gets the goods into his factory or directly to the your custom station. From custom station, it goes out of India. Merchant export, like trading activity. Whatever goods are manufactured by say Sami and Ayush, he picks from those two factories. He brings together at his location or directly to the port. From port, it goes out of India, which is called as a merchant exporter. Third-party exporter, combination of your 1, 2, and 4, like where there is a mutual dependency. This is what you need to remember about these people, how they operate. Coming back. Third-party exports, benefits for supporting manufacturer. Supporting manufacturer is one who manufactures goods or services or parts or accessories or components for a merchant exporter, that is trader, or a manufacturer exporter. So I have a manufacturer who exports or merchant exporter who exports under a specific authorization. For any benefit to accrue to the supporting manufacturer, names of both supporting manufacturer as well as merchant exporter. Like example, I was talking about Sami and say Ayush. Ayush happens to be a merchant exporter. Swami happens to be a supporting manufacturer. Both their names will appear in the shipping bill as well as must figure in the consent export documents, especially tax invoice, shipping bill, bill of export, airway bill, etc. Why? Because if there is any authorization, the benefit of that authorization should be given to both Swami and Ayush. This is how benefits accrue where there is an export obligation by merchant manufacturing support. Third-party exports. Third-party exports is allowed under FTP. Third-party means exports made by an exporter, manufacturer, exports paid by an exporter or manufacturer on behalf of another exporter. So I'm an exporter, or I myself am a manufacturer, but I'm exporting on behalf of another person. In such cases, export documents such as shipping bill shall indicate name of both manufacturer exporter and manufacturer and third party exports. BRC self-declaration export document invoice should be in the name of third party exporter. The person who is exporting, his name will be appearing in the BRC. Now, there is a difference between supporting manufacturer and third party exports. Moving further. Students, whatever basics you have studied, you have known, I'm not touching. What is relevant and important from examination point of view, I'm explaining. Next, the important topic called duty exemption, duty remission scheme. Duty exemption, duty remission scheme. Export of promotion schemes, duty exemption and duty remission scheme. First, we'll talk about the difference between exemption and duty remission. Duty exemption, this is where I am allowed to import without payment of duty. Example for duty exemption is advance authorization, duty-free import authorization. We can even think of EPCG also. On the other hand, duty remission, my examples for duty remission are like duty drawback, RODTEP, remission of duty, taxes paid kind of thing. Then also similarly is your services, ROSCL. These are schemes which are called duty remission. Now, under duty remission, the burden of duty or tax, the burden of duty or tax is refunded back. Refunded back when goods are exported. So that means to say, one case, don't take the burden. Like, no, I can put it this way. You take the hit and come to me to take a refund. Or you come to me in the upfront, don't take the burden, I'll absolve you from payment of duty. that is duty exemption vis-a-vis duty remission. This is pre-facto, that is post-facto. Pre-facto, I complain. I say that, sir, I am a importer. What do you do? Sir, I do manufacture. What do you do? I export. Oh, okay. Are you having capacity? Yes, sir, I have a capacity. So they do some assessment and then give you the duty exemption mechanism. That is called authorization. On the other hand, your business is not stable, or you don't do it on a regular basis. So what do? You undertake your regular business activity. Then when you're exporting, to encourage you, this duty remission schemes comes into picture. What is in store for you from your examination point of view, from your career point of view? Career point of view, many CAs doesn't even do a practice. Reason, they don't have that practical hands-on experience on handling with your advance authorization, DFIA, etc. Please keep in mind, these are all automated. That means you need to know the law. You need to know how to fill the form. Sitting at your office, you can guide and assessing what you're doing, what is your business model, how you can import. You'll get this authorization. Like you need to have IEC. Once the authorization is there, give it to your CHA agent, clearing house agent. When the goods come, they just need to put this license number where you get the goods without payment of duty. Once you manufacture, send back. Again, there is a declaration which needs to be filed to fulfill export obligation. Very, very good, promising career if you want to look from DGFT point of view. Coming back, exemption, duty remission. Like I gave example of duty drawback and all. DFIA, AAA. Rebate of state and central tax levy, ROSCTL. Now, first scheme, duty exemption, advance authorization. I'll explain you this advance authorization, then we'll come to the technicalities. Advance authorization. Short, we call as AA. I require inputs, catalyst, which could be general, which could be restricted. I use in manufacture. I make a export. Here, the goods which are purchased or imported, I would say imported. Goods which are imported have to be placed in the finished goods. That means to say their existence is must in my finished goods. Like example, if I take about a laptop manufacturer, I import integrated circuit. I import a few gadgets. To manufacture my laptop, a motherboard is required. Motherboard requires integrated circuit. So I would say, so goods which are imported inevitably integrated to my finished goods. So which are incorporated in my finished goods, I use this license called advance authorization. So if the presence is not there, then I don't get a permission for that. Exception is your catalyst. So I need to give a classic example. Let's take example of a rubber product, tire which is getting manufactured. So tire which you see as output, the basic process, if you see, I have various chemicals compound. I mix chemicals and compound in a particular composition. I apply a blower, which is called boiler. Through boiler, steam is generated at a particular temperature where the chemicals are soaked to position where it becomes a compound. So the plain chemical items mixed together, I apply pressure through boiler where a compound comes into existence. Then compound I'll make as a rubber paste. I'll put it through a roller. I'll add nylon thread. I'll add few more what you call the thread and other liners to make as a tire. Now, in the process, if you imagine this boiler, the activity of boiler, it blows a hot air. Because of the hot air, the compounds get bonded together. Now, due a process, water gets evaporated. Do you find that in the finished product? Answer is no. So our advanced authorization expects that those inputs exist in the final product. There, you will be given an authorization. Once, like you have to file an application. You have to file an application online. On the basis of your application, you will be given an authorization. This authorization is valid for 12 months. Within 12 months from the date of authorization, I have to import the material. Once the goods are imported, within 90 days, I have to export the goods. And here they have something called value addition. This value addition, they say minimum 15% is the value addition expected. What is that value addition? Assuming my FOB value of exports is A, my CIF value of imports, CIF value of imports and other items is B. They are saying that A minus B divided by B into 100 should be greater than 15%. Minimum 15%. Now, please look at the terms I've used, FOB, CIF. When I talk about imports, cost, insurance, freight, all together, valuation, chapter 2, section 14, when we have studied, we have various methods of valuation. The basic ingredient is cost, insurance, freight. But when I talk about exports, free on board, FOB value. So this A minus B divided B should be minimum of 15%. This is what all together I understand from advance authorization. Any questions so far? Let me know. How the scheme works, I have explained. Any questions you have so far? Let me know. Can I go further? Good. Okay. It's a bit technical. Can you please explain again? I'll do that now. Okay. Others, do you have any issue? Samay says clear. Ayush says explain once again. Let me again explain. Very simple. Ayush, very, like, no, let's understand in a simple manner. I have a factory, I have a manufacturing facility, I need raw material, which I have to import, I use in manufacture, and then again the goods go out of India. Now, let's take this example of a laptop. Laptop to be manufactured, I call assembly. I have to have an integrated circuit. Those ICs which I import, what do? I assemble, I send back laptops out of India. Is the laptop going to be retained in India? Answer is no. When the raw materials, spare parts come into India, used in manufacture, go out of India, question comes, why should I pay customs duty, file a refund application or duty drawback? So upfront, I have to pay import duty, do the manufacture, export to the satisfaction of the proper officer, and then file a duty drawback for the material consisting in that. Around 95%, I get the drawback. Now, instead of getting into all this complexity, the law gives me a simple mechanism called advance authorization. Do you see? Your inputs, what you import, do you use in your manufacture? Answer is yes. Does it contain in the finished products, maybe in the same fashion or process fashion? Answer is yes. Then go for advance authorization. So how do I do that? Sit at your office, file an application online. Give your basic details, manufacturing activity, from where you want to import, what is a value addition, are you going to send to anyone else, all those information. Then on the basis of that, you get an approval. Once I get an approval, the time limit, the clock starts ticking. Within a span of 1 year, I need to import the material. Yes, sir, I did an import. What I have to do? Once I have imported, process, within 90 days, send back the finished product. Now here, Getting the material from the date of authorization is 1 year. Once the material reaches my factory, like the import happens, within 90 days, process, send back. So when I process and send back, the office, no, the government says, hey, look, you have imported item called IC, you have exported item called laptop. So the value of imports, CAF value plus others which are used, when I compare with your export value, did you made a profit margin? That is value addition. You remember your transfer pricing? You remember your GST where there is a related party transaction? They expect under GST minimum 10%. Under customs, your no international trade taxation, 10 to 15% is your margin expected. So here they say minimum 15% should be a value addition. That means my export FOB value minus CAF value of imports, the gap that divided by the total purchase. If I get 15%, then you're okay to have this advance authorization. Hope this is clear, ma? Ayush? Done. Okay. So here, now what is that? It says who is eligible. Advance authorization can be issued to manufacturer exporter, merchant exporter, tied to a supporting manufacturer. Please look at the term. I should be a manufacturer or I'm a merchant, but I'm tied to a supporting manufacturer. Reason, if I don't manufacture, advance authorization is not given. So manufacturer is key person in this approval. Advance authorization for pharmaceutical products manufactured through non-infringing process shall be issued to manufacturer exporter only. I cannot give to any other outsider if it is a pharmaceutical. Eligible supplies, physical exports, intermediate supply, deemed exports. So I can do physical exports. I can give to another license holder or deemed exports. Exports to EOU, SCZ will be considered as a deemed exports. Basis of authorization. Advance authorization is issued for inputs in relation to result product. Inputs in relation to resultant product on following basis. As per SION, Standard Input Output Norm, or on the basis of self-declaration, or applicant-specific prior fixation of norms by the norms committee, or self-ratification scheme. There are 4 mechanisms. So what I can do, in general, I'll go to the officer and say, sir, I import 10 circuits. I have these items. I merge, I manufacture. So it's called self-declaration. Or there's a standard input output norm. Like example, the tire manufacturer I was mentioning. So if I have ingredient A, B, C, no, I mix together in a particular composition and these goods get exported. So if you add 100 kgs of input, standard expected output is 85 or 88 or 90. Now, this is your SION. Or there is a norms committee where I go and explain, so this is my industry, these are the specific parameters, give me a approval for this particular thing. Then advance authorization will be permitted. Yes, ma'am. Sami says not from a third party. This mechanism is not available for a third party, only for manufacturer. Supporting trader exporter advance authorization is allowed, not for third party exporter. Yes, ma'am. It is only for manufacturer supporting manufacturer. Swami, you're right. Swami. Looks like, Swami, you have a prior knowledge on customs provisions, ma'am. Good. Self-ratification, export, pre-import condition. Now, this is technical. You wouldn't come across. I'll explain this thing. Goods, instead of getting imported, I can buy domestically also, like within India. Imported inputs are subject to pre-import condition. They should be physically incorporated in the export product. This topic. In case of local procurement, sir, I have an option to import from outside India or I can purchase locally also. So when I buy locally, there is a document called invalidation or advance release order, which is issued. The input shall be procured prior to manufacture of export, shall be physically incorporated in the export. Now, what is an invalidation letter? Invalidation letter, a regional authority like Export Promotion Council, like the branches of DGFT. This is an authority who shall issue invalidation letter where domestic supplier intends to obtain duty-free material for imports through advance authorization for supplying resultant product to another advance authorization or DFIA authorization. So here, under invalidation letter, let's take an example, say Ayush, Sami. Now, the goods which are manufactured by Ayush, Swami is a person who does exports. Swami, instead of importing the goods, he wanted to buy from Ayush. So when Swami wants to buy those goods, then there is a letter called invalidation letter, which is issued by regional authority. They say regional authority shall issue invalidation letter when domestic supplier intends to obtain duty-free material for inputs through advance authorization for supplying resultant product to another advance authorization, DFIA or EPCG authorization. So Swami does a manufacture and again he sends to say Yogesh. So in this case, to buy from Ayush locally and post, I want to supply to Yogesh. Then I use something called invalidation letter. This is model number 1. Model number 2, very, very simple, plain vanilla. Swami is a manufacturer who exports. Instead of import, he wanted to buy from locally. Say, let's take example, ABB Limited. ABB Limited is a domestic tariff unit, DTA unit. So when goods are to be purchased from ABB Limited and Swami will use this and then export, then there is what you call GST, which will be charged by ABB Limited. This will be exempted under Section 147 of GST law. Section 147 deals with your deemed exports. So in that case, the regional authority will give an invalidation letter stating that, look, Swami is having IEC. Swami does a manufacture. Swami exports goods out of India. Swami wants to buy goods from ABB Limited. So Miss ABB Limited, kindly export the goods to Swami against so-and-so license, which I have granted, called advance authorization. Based on this, read with Section 147, ABB Limited supplies the goods without payment of GST refund can be claimed by Swami or ABB Limited. This is where my invalidation letter comes into picture. Similarly is your advance release order, where regional authority shall issue advance release order if domestic supplier intends to seek refund of duties exempted through deemed exports mechanism, where the refund has to be sought by AB Limited, then advance release order will be given. Usually this term advance release order is used where we have state trade enterprises. You remember there are restricted items which are permissible only to be purchased or sold through STE. So those cases where refund wants to be given by this license holder, then advance release order will be given. What happens is, let's take example FI, Food Corporation India, FCA. Yogesh manufactures goods, supplies to FCA. FCA exports out of India. So advance release order is given to this FCA to claim the refund of that particular duties and taxes paid. So this is where we apply these provisions. I understand. This becomes little Greek and Latin for the reason first time you are coming across this terminology called invalidation letter, advance release order, value addition, imports, exports. It's like a black box. Nothing goes in. What am I trying to do is I'm trying to put it in a simple plain vanilla model to make you understand the concept. Once you understand the concept, now you can deal with this once you read once again. My class, this is a recorded session available on the ICAI portal. Run through your institute material, read once again, you get more clarity on the concept. Validity of 12 months, I've explained. Requirement and eligibility condition. This value addition, minimum 50% value addition is required, which also I've explained. What are the duties? Examination point of view, when you compare DFIA with advance authorization, this is a difference. Under the advance authorization, all these duties gets exempted. Imports under advance authorization are exempted. Customs duty, additional customs duty, cess, ADD, CVD, safeguard duty, transition product safeguard duty, whichever is applicable, all these are major exemptions. Under your DFIA, duty-free import authorization, only basic customs duty is exempted. So this is the difference between DFIA and customs. Modus operandi, I'll explain. But in terms of benefit, my advance authorization is like a Vajrayana. It's a blanket approval. But DFIA, only specific approval called basic customs duty. GST, anyway, I claim a refund, no? Who's asking this? Sami is asking. GST, Sami, if I have imported, I'm entitled by input tax credit. So claim input tax credit, export with payment of GST, again, you'll get a refund of that. That's why they're not talking about GST. Because CENVAT mechanism is there under GST, unlike your customs law. Actual user condition, I have explained this. Free of cost supply by foreign buyer, valuation. Whatever FOC purchases are there, even that notionally for that value addition, A minus B divided B. If at all I get any items free of cost for the value addition, my sale value, my purchase, though it's a FOC, notional value of that cost, I'll add as cost A minus B divided B, I'll get that formula 15%. Export obligation, as I said, 90 days is a window within which I have to export. Now, next coming is your DFIA. Students, today is Sunday. I take little more time. We are at 9:52. Another 10-15 minutes spillover will be there. Please bear with me. If we finish EPCG, by and large, we are through. DFIA. Duty-free import authorization. Duty-free import authorization. So here, this is ulta of your advance authorization, where I apply to the regional authority saying that, look, I'm a manufacturer. I want DFIA benefit. So when I apply to the regional authority, they give a permission. They give a permission. So once I get a permission, what I'll do, I will manufacture and I'll export. I'll manufacture and I'll export. On the basis of export, there is something called standard input output norm. What is the inputs you have used to manufacture the output? This gap is your input processed as output is fixed by something called standard input output norm. On the basis of FOB value of exports, where minimum 20% value addition exists, then you get a script called duty-free import authorization. This is on the basis of exports. This script, what I will do, I can use for any further imports. So here, duty-free import authorization, before manufacturing, I apply. Sir, I have a manufacturing facility. I'm doing a manufacture. I use so-and-so components. And these goods which I manufacture, I export out of India. And this is a standard input-output ratio for me. And I prove to the officer that minimum 20% value addition is maintained. On the basis of exports, shipping bill is filed. I get an automatic script which is credited to my IEC, which is called DFIA script. What do I do with this script? I can use it for further imports when I purchase, or I can transfer to someone else. Let's come back to the material to understand this. DFIA, where standard input or output norm permits use of either generic or alternative name, description, etc. in the authorization must match exactly with the name description endorsed in the shipping bill. So they are saying that whatever inputs are there and whatever output are there, both should exist. And shipping bill, generally I have the finished goods. Those finished goods should be matching with the standard input output norm. At the time of discharge of export obligation, at the time of redemption, the regional authority shall allow only those inputs which have been specifically indicated in the shipping bill with each quantity. The above provision will also applicable to supplies to SEZ, supplies to deemed exports. So here they are saying that, look, whatever inputs are permissible, you process and you generate something called output. So while giving this certificate, they say that your standard input outputs as per SOAON should be matching with your process and finished product. This is a starting point, accounting for input. These are common provisions. I'll explain DFA and then I'll come back to this common one. First, let us understand DFA. Again, I'll come back to that. Provisions applicable to DFIA are similar to advance authorization. However, authorization shall be issued only for products which have SION notified. MCQ question. Any products which are manufactured not in compliance with SION are eligible for duty-free import authorization? Answer is no. Only those products which have no compliance with standard input-output norms are eligible for DFIA. Import tire under DFIA is not allowed. This is an exception. DFIA shall be exempted only from payment of basic customs duty. As I mentioned earlier, out of all the duties, basic customs duty alone is exempted. So here, process is duty-free import authorization shall be issued on post-exports. Manufacture, then I get that script. So first, what I do? Step 1. Application is to be filed with concerned regional authority before starting export. Merchant exporter shall be required to mention name and address of the supporting manufacturer of export product on the export documentation. This is a procedural aspects. No DFIA is available if there is an actual user condition in SION. That means to say, those goods you have imported, if those goods are subjected to actual user condition, then you are not entitled for DFIA benefit. Minimum 20% value addition. And this particular DFIA, as I mentioned, is a script which is transferable. The script which I'm going to get, I can transfer. I can use it for myself or I can use it for anyone else. Export shall be completed within 12 months from the date of online filing application. So when I file application, which is approved, from there 12 months, I have to manufacture. My window to manufacture, where finished goods come into existence. DFIA is valid only for 12 months from the date of issue. Once the goods are manufactured, then I export, where I get my DFIA script. So this is your the mechanism of how DFIA is going to work. Advance authorization. Ayush is asking this question. Advance authorization for any product, DFIA only for SA. Yes, ma'am, you're right. I can go for advance authorization where I explain what is my process. Then I file my application. In case of DFIA, sir, so-and-so notification, so-and-so entry, I find. Then they will allow. And Sami is asking minimum validation for DFIA 20%, for advance authorization 15%. Why tire not allowed? Policy factor, ma. A few things there would not be a logic. It's a policy decision, right? Now, common similarities. Common similarities. Accounting for input output. Both the FIA, AAA have to prove that these goods which have come, AA is actual user condition. I have to import, use, and then export back. Importability, exportability items, prohibited, restricted. Prohibited items, advance or DFA, no permission. STE, I can import or export through STE, that is permissible. Restricted items, on the basis of application, authorization will be given. Purchase from domestic sourcing, yes, both the cases, it is allowed. Money realization in foreign currency, at the time of script, they don't insist, but as per FEMA regulations, I have to repatriate funds, which is compulsory. Then, after DFIA, duty drawback, very, very simple mechanism. The duty drawback is when the goods are exported, the law of land says that export the goods, but not the duties, but not the taxes. So wherever you have purchased the goods, forget your advance authorization, forget DFIA. Imagine the regular clients who have come across, you've done in your audit. Those companies, those assessee who have manufactured and exported the goods out of India, inevitably, without their knowledge, there could be an element of customs duty paid on their purchases. Let's take example this way. Say, for an instance, Yogesh imported some material, he manufactured, sold those goods to Sanjay. Sanjay purchased domestically and also purchased from Yogesh. So when we look at the costing of Sanjay, the customs duty paid by Yogesh sits in the cost of Sanjay also. Sanjay processes these items and sells these goods to Ayush. Ayush does a trading activity and sells to Sami. Sami exports out of India. When the goods are going out of India, inevitably, Swami doesn't know that his items which he purchased consist of the customs duty paid by Yogesh. So this is where your duty drawback comes into picture. In the supply chain, if there are any purchases which are subjected to duty, taxes, which are not refunded, which are added to your cost, let that be given back as a duty drawback. So we have all India rate, you have brand rate. All India rate, the standard, the brand rate based on your product, based on your norms committee, the rate is decided. This is your duty drawback. RODTEP, scheme of remission of duty taxes. This is also similar to your duty drawback. When I have paid this particular duty and when the burden is there, they say that, look, since you have paid the duty, I'll give you a refund by way of this removal of duties and taxes on products which you have exported. So I'll show you one shipping bill. Hope you are able to see now. This is your shipping bill where you will see there is goods which are exported out of India. On this shipping bill, you will see that there is a FOB value. There is a FOB value. On the basis of FOB value, you can see there's a duty drawback. There's a duty drawback. Also, there's a, sorry. So in this FOB, you will have duty drawback and RODB, refund of duties and taxes paid. So this serial number 1 and this serial number 5, this is calculated at the rate of 1.2%, and this RODP is calculated at the rate of 1%. So when I export, it is not no compulsion that once you get a duty drawback, you'll not get RODTP. Both are working in a different fashion. So based on the industry norm, you get the standard all India rate of duty drawback. You'll also get RODTP on the basis of the factors fixed by norms committee. So these are the duty drawbacks which I entitle when the goods are exported out of India. So this is one example I thought I'll show you for your understanding. Next. From here, we move on to the next topic called EPCG. One of my favorite topic, and most of you, I don't know how many of you have given a chartered accountant certificate. No, this EPCG is one fantastic area. EPCG. So the logic is that when you are exporting, when you're dealing with exports, to promote your exports, there is a scheme called Export Promotion Capital Goods Scheme. Export Promotion Capital Goods Scheme. So under this particular scheme, they say that for a new setup, for existing setup, that is on account of repair, replacement, renovation, there is a mechanism to import capital goods without payment of duty. Without payment of duty. I can import capital goods without payment of duty. So they say that this capital goods can be imported pre, during, post manufacture. These goods, what we are talking about, can be imported prior to manufacture, for the purpose of manufacture, post manufacture. Post manufacture is your packing material, right? So here the modus operandi works like this. Whatever duty you save 6 times the duty, what you'll get a value. So much of goods have to be exported, so much of the value of goods to be exported within a span of 6 years. Within a span of 6 years. This is what they have mentioned. So assuming I have saved duty rupees 50 lakh, my export obligation shall be 50 into 6, 300 lakhs. So I have to export goods for rupees 300 lakhs within a span of 6 years. Within a span of 6 years. Are we clear so far? Any doubt? Let me know. I'll clarify before I go further. Good. Good. Now here you have something called your export. I have to do for 6 times within a span of 6 years. So there is something called average level of exports. That means, look at for your last 3 years. Last 3 years, what is your earning in foreign currency? Maintain this average during 6 years. export obligation should be over and above average performance. That means to say, let's take an example. Say ABC Limited have purchased capital goods, imported capital goods, where the duty saved is rupees 50 lakh, right? So when I look at this has been, this happened, say in the year 5. Year 5, they have purchased this capital goods from the date of incorporation. So what does the law say? Since you are purchasing in year 5, I look at year 4, I look at year 3, I look at year 2. So year 2, my purchases, exports earned is 20 lakh. Year 3, my export earned is 25 lakhs. And year 4, my exports is 30 lakhs. So total of these 3 years, 45 plus 30, 75. 75 divided by 3, I'll get a result of 25. So my last 3 years average is 25 lakhs. Correct now? So here what EPCG is expecting, see year 5, year 6, year 7, year 8, year 9, year 10. For all these years, your average should be maintained. That means every year, minimum 25 lakhs exports should be there. Now, what is my obligation under EPCG? Under EPCG, 6 times duty saved. That 50 into 6, I get 300 lakhs, right? Now, this 300 lakhs I have to achieve over a span of these 6 years. 1, 2, 3, 4, 5, 6. So, assuming I earn 30 lakhs over here, I earn 40 lakhs over here, I earn 50 lakhs over here, I earn 150 lakhs over here, I earn 200 lakhs over here. 200, it's 300, right? Okay. 90, 120, 45, 165, 85, 170, 170, 120, 165, 170, 250, and the 50. Yeah. So here, law is expecting that every year, maintain your average. Let your exports don't dip than your average of last 3 years. You perform exports beyond your average, which will be considered for obligation for your EPCG, which will be considered for your discharge of obligation for EPCG. Yes, ma'am. Year of import also I can consider for calculating 6 years. Yes. From the day of import, 6 years I can say. Right? So this is how my EPCG is going to work. I pause for a minute. Let me know you have any doubts which you want me to explain again. Clear? Good. Then I'll go further. Now, couple of modifications in this particular scheme where they say instead of import of capital goods, if these are purchased domestically, these goods are purchased domestically, then my export obligation will be 75% of 75% of your actual obligation. That means to say, if this company has purchased goods within India, so duty saved into 6 is what we say, right? Into 75%. So 6 into 75%, I'll get 4.5. That means 4.5 times duty saved is my export obligation. When if the capital goods are purchased from India, within India. If the goods are imported from outside India, 6 times. 75% of 6 is 4.5. So in case if I have purchased goods within India, my duty obligation is less than that 6 times, that is 75%, which is 4.5 times the duty saved. This is one relaxation. And they say you are obligated to perform duty. This is one relaxation. Another relaxation, which is called condonation. Relaxation of the obligation. If less than 3 years, if within 3 years, 75% of obligation is achieved, balance shall be condoned. Government says that, look, you have to perform that 6 times. In case if you're really doing good, where in the example given here, like here I have an obligation of 300 lakhs, right? On 300 lakhs, 75%, 3 by 4. 300 into 3 divided by 4, 75%. 25. Let me just check this. 300 into 3 divided by 4. 225. Assuming I do this way, 100, 125, 100. Adding all these 3, I'll get 225 lakhs. In first 3 years, I have attained 75% of the obligation. Then the balance 75 lakh will be condoned. This shall be condoned. This is what my EPCG schemes talk about. Are we clear, ma? Good, thanks. So another 3 minutes to 4 minutes, we can wind up. Ma? There's a small topic called deemed exports, the next topic. Next topic is your deemed exports. I have EOU, I have software technology park, I have biotechnology park, hardware technology park. Now these, like, no, if you recollect your GST law, section 147 of GST law, we call any good supplied to person holding advance authorization, any goods supplied under EPCG license, any goods supplied to a person who's operating as an EOU shall be considered as a deemed export. That means the goods retained in India, the goods does not go out of India. That's called deemed exports. So here, the benefit of advance authorization, duty-free import authorization, a person who's having a license, if they supply goods to these, deemed, I call deemed exports, to deemed exports, they qualify, this supply shall qualify for export obligation. That means to say, though I have not export goods out of India, I supplied goods to this EOU, STP, BTP, I get entitlement for export obligation compliance. In addition to what they enjoy, these units as a deemed exports, I can import goods without payment of customs duty. And what is that I have to do? I have to export goods out of India, subject to your domestic tariff clearances. there are certain no permissible value which I can clear to domestic tariff area. And the norm for these deemed exports is for every block of 5 years, for every block of 5 years, my net foreign earnings, my net foreign earnings should be positive, should be positive. In addition, I have a benefit called my money earned in foreign currency can be kept in exchange earners foreign currency account. Exchange earners foreign currency account. When you do your bank audit, when you do your statutory audit, you would have verified that money kept in bank account, that is realized in your bank account, or someone have something called EEFC account. So what we do, whatever spot rate is there as on 31st March, we apply for that EEFC account. Why do people keep in EEFC account? I don't want to lose. I don't want to use the benefit of this exchange gain or loss. That's why I park in EEFC. All my obligation I pay through EEFC. Swami is asking, so what happens if net NFE is negative? If NFE is negative, your license shall be cancelled. Your license shall be cancelled. So these are the provisions which are connected with your deemed exports, which are relevant from your examination point of view. AOUA HTP. Now, these are like page number 49, categories of supply considered as a deemed export. So if I supply for international, like multilateral, bilateral agencies like UNESCO, UNO, etc., they also will be considered as deemed exports. International projects, like if there is a mega power project or infrastructure for international organization. This is one table where you can expect one MCQ from your deemed exports point of view. So with this, we come to the end of our foreign trade policy, which was there in your institute material. As I said, we have come to the end of conclusion. Before I part with my learning session, this foreign trade policy, customs law, I would understand that many of you have come for the first time who have read this terminology, who have read these provisions. Don't lose heart in your examination. My suggestion is look at this screen, end of the chapter. Let us recapitulate. Now, this is a fantastic job done by Board of Studies. Read this particular every chapter where they have given few important things which are relevant from your examination point of view. Majority MCQ questions are framed based on these synopsis. End of this synopsis, you have test your knowledge. Never ever attempt your examination without solving these questions which are under test your knowledge. Again, I'm not promoting, I'm not saying that this is the way your exam pattern is set. But looking at the way the questions are being set, we try to understand where we need to focus upon. So we don't have time, we don't have exposure, we don't understand. Don't worry. The way this recapitulate provisions are there under customs, under foreign trade provisions, don't miss out. Point number one. Point number two, your MCQs, which are there from the previous examinations, and whatever classes you have attended online, where we have made you to make a running notes. Those are certain important areas which you need to focus as a revisionary point of view from your examinations, right? So with this, I end my today's session. I can see your appreciation messages. Thanks, Swami and others. I hope I made you to understand with this foreign trade related policy provisions. I thank Board of Studies. I thank students for spending time to understand these provisions. Let's get connected sometime in future once you get qualified as a chartered accountant. All the best for your examinations. See you all. Thank you. Ashok. Thank you. Thank you. Bye.